What's going on, my friends? Chris here. I want to bring you all an update today of Bitcoin. Right now we're sitting at $21,286. We're up about 0.5%. What I want to do is take a look at Bitcoin on the 1 week time frame. So that's what we're looking at right now. We're going to work our way into the 1 hour time frame. So if you guys get some from these videos, don't forget to like, subscribe, hit that notification bell. I want to make this as quick as possible for you as I value your time. And let's dig into this. So first of all, guys, we're going to be looking at Bitcoin here on the 1 week time frame. Main area of support that we want to continue to hold is roughly going to be about $17,700. We're going to be looking at that area, seeing if Bitcoin can continue to hold. So far, we've had a bit of a double bottom here, but the bulls still have a ton of work to do here, guys. We got to get over top of the 200-week moving average, which is going to be at $23,879, and then it's going to be this $25,000, roughly $100 right in this area here. And what we need to do, guys, we got about another day or so. We need to get this candle that we have today. You can see it's a little bit smaller, or this week. We need to get it up above that 200-week moving average. Otherwise, that's going to be another week that we have traded below the 200-week moving average, which is significant because we had 1 week here, guys. We finally got up above it. You can see we lost it, and this was on heavier bearish volume. And since then, it's roughly been 4, 5, 6, 7, 8, 9, 10. I mean, we're on week 11 trading below this 200-week moving average just from this area here. If we want to go back all the way to June of this past year, I mean, this entire time we've essentially been trading below this 200-week moving average. So that is significant, guys. That's a big area that we need to get up above. And I think a lot of institutional investors want to see us trading up above the 200 moving average on the week as well as on the daily time frame. So those are two areas we're going to be watching. Now, one thing I want to point out here, we're going to be using the smooth Heikin-Ashi candles, and this is going to be basically representative of the 12 EMA. So that's what you're going to be looking at here for these Heikin-Ashi candles. And one thing that you'll notice here is they do a really good job at capturing the trend and keeping you in the trend. So back here, this entire bull market here, you can see, guys, these Heikin-Ashi candles, they were green this entire time. So that meant stay in your position. Now, take a look at what we've been in this downtrend here for over a year, and these Heikin-Ashi candles on the weekly time frame here, they have done a great job at having you not try to pick the bottom and get wrecked. So this is something that I'm going to continue to look at here, because what we want to see are these candles starting to get smaller and then flip to the green and start expanding like we had back here on heavier volume, where we have no wick on the bottom and just have those nice strong candles just like this one here. And then we got driven to the upside. So right now, according to this on the weekly time frame, these are still saying wait, be patient. We still could have one more flush to the downside. Not saying it has to happen, guys, but I'm prepared for that. And if we do all of a sudden start breaking up above 25,000, we back test it, we would start to get in an uptrend, and there's going to be plenty of time. Just like back here, there was plenty of time to get into these moves. You know, you don't have to nail the absolute bottom down here, guys. Even if you got in at, 17,000. We went all the way up to $70,000. So you don't always have to nail bottom, and many times that's how you can get hurt, or trying to, short the top or buy the bottom, because many times the price can just keep going lower on you, and then that's where you really get hurt, because you keep, cost averaging down. And this, I'm talking about a trade, guys. I'm not talking about dollar cost averaging. That's fine if you're dollar cost averaging, but in trades, you don't want to just keep averaging down unless you had a plan for that and you're trying to play a reaction. But when you're looking at these things, risk management always has to be the most important thing. So preserving your capital is more important than making more capital. That's the first thing, learning how to preserve your capital and looking for those good risk to reward areas. So right now on the 1 week time frame, if we take a look here, guys, our VWAP is going to be at positive 10.70, so that's good. That's increased a little bit, but our money flow is going to be a negative 8.62. So we still have not went positive on the money flow there for the cipher, and then our relative strength is going to be at 41. So we are not trading up above that critical 50 area, which we have hit before on the weekly time frame. This area here, when we roughly went from about 32,000 all the way up to 47,000, 48,000, right there, we got to around that 50, and then we saw rejection. So it's important that we're trading up above that when we're in a nice healthy bull market. You can see up above here, guys, we got above 50, and this was at about $10,000, and then we stayed up above it that entire run there. So definitely something I want to keep an eye on here, as well as our VRVP. So this was an area showing a lot of buyers and sellers right around this $20,000. The next area, you can see we have this big gap. So the next buying area that I feel like institutional investors would be looking at would roughly be around anywhere from 13,000 right down into probably about that $7,200 range, right in that area. So I would just be cautious, guys, in this area. You don't have to get into a position right now unless you're dollar cost averaging. I do believe that these are attractive areas overall, but you just still have to be protective. is my opinion, because we still have a lot of overhead resistance and a lot of work to do, and we're not trading up above these 200-day or these 200 moving averages on the weekly and the daily time frame, guys. And really do some reading about the daily 200 moving average. Paul Tudor Jones talks a lot about it. It's really important in trading, so really pay a lot of attention to it. So what we're looking at here for Bitcoin now, if we can continue this move, we'd look for resistance up around that 22,750, and then it'd be this 200 moving average on the daily time frame, which we have been trading below now since roughly December 28th, 2021. That's how significant that is. So we're really looking at these areas, guys, and that resistance would be at $24,068. So I'm not saying Bitcoin can't get moving from this area. I would just say still be cautious, because we have a lot of overhead resistance area, and you don't necessarily want to fight the trend. So if we get into the one-day time frame, relative strength is going to be at 65, so that's good, up above that 50 mark. VWAP is going to be at 10.92, so that's good. That's going to be in the positive, and then our money flow is going to be 1.70. If we get into the 4-hour time frame. And also, guys, let me know what you got going on this weekend. I'm going to be doing some leaves. I've already started. We have about 80 to 100-year-old oak trees on our property, so it's a lot to take care of and a lot of leaf duty, so that's what we're going to be doing today. I always love to hear what you guys are up to as well. All right, so you can see we're running into this area of resistance here, guys. If we can get over top of that, like I said, I'd look to that 22.8, and then it would probably be up to around $24,271. Terms of support, we wouldn't want to go much lower than that 20,215. If we take a look at our relative strength, we're at 68 right now. Cypher is going to be a negative 1.64 for the VWAP, and the money flow is going to be a negative 1.44. Then if we get into the 1-hour time frame, all right, so on the 1-hour time frame, Heikin-Ashi here. So if you are in a position, what's this showing on the 1-hour time frame? Say you would still want to be in this position until until we start to roll over and you see a nice bearish candle on some heavy bear volume as well. But this Heikin-Ashi does a really nice job for you guys. You can see here how it captured most of this trend right there until it told you to sell out. Here's a rebuy here. So some of these moves, if we measure them, and this can kind of help you. I like using regular Japanese candles with this Heikin-Ashi together. I think it really works well. So like this one, guys, to where you sold out, I mean, that's a 7% move. These are really nice moves that you can capture if you're swing trading. So this one still, I mean, we made it up to about 6%. So it was just something that I kind of want to put on your radar. It can help you out, especially if you're in a trade. It can help keep you in a trade so you don't take profits too early. On the 1-hour time frame right now, we're at 58 on our relative strength. VWAP is going to be a negative 6.98, and then the money flow is going to be a positive 6.24. And the last thing I wanted to look at were our technicals. I used to do this and people really enjoyed it, so just let me know down low if you want to see more of it. So on the 1-day time frame, we have a 4 sell, an 8 neutral, and a 14 buy. On the 1-week time frame, we have a 9 sell, a 10 neutral, and a 7 buy. And on the 1-month time frame, we have a 10 sell, 7 neutral, and a 5 buy. And what this does is go through everything. It calculates all your moving averages and then all your oscillators over here, and it just adds them up and puts, you know, is it neutral, is it a buy, is it a sell? So I'm going to start going through that at the end as well if you guys like that. So to get some from this, don't forget to like, subscribe, hit that notification bell. Let me know what you got going on this weekend. Take care, my friend.